Well, happy Monday. It is March 10th. Want to bring you up to speed with the latest trends here in the Austin market. I'll start real quickly with national 30-year fixed rate mortgage rates. Right now, in the last maybe 2 to 3 weeks, we've been at or below 6.75. We're now right now kind of trending between 6.5 and 6.25. It's still pretty volatile. You can see it's bouncing up and down, but the good news is, at least for now, interest rates are staying in a more favorable pattern for buyers in the short term. So right now, interest rates are still looking pretty good for the market. Wanted to show you this map. This came from Texas National Title. This is looking at year over year. This is a heat map. It's looking at February median sales price appreciation. If it's blue, obviously that's a negative number. And so what it's showing you is zip code by zip code. Generally around the metro, all these major zip codes are obviously in the blue because they have lost value. Boy, a big discrepancy in price, but some of that has to do with number of sales. These maps aren't always perfect, but you've got drops in price anywhere from just a few fractions of a percent all the way up to 30+% down from this time last year. So didn't want to dive into this in too much detail, but just to show you market wide, we have seen the median price come down anywhere from a few percent up to 30% in some of these zip codes. So if I look at the MLS, so this is right now live on the MLS. If I look at this market watch box right here, in the last 7 days, we've had 780 new residential listings. Price decrease is still and consistently trending above new listings. And now we have a lot of listings on the market, but generally Austin right now still remains in the top 3 to 5 markets in the country for price reductions, which really just says we're still trying to discover price with buyers because interest rates are higher and because Austin had such a tear during the pandemic. A lot of that has reset from last May. We've already seen the median home price come down almost $120,000. We're starting to see some signs that it's leveling off, but price discovery is still out there. And what that means is if it's just all the stars align, if it's perfectly staged, perfectly priced, there's no inventory, there's properties that can still sell with multiple offers and do really well. Most properties are going to take 2 or 3 months to sell. And I'll show you that data here in a second. So just know price decreases are pretty normal in this market. And I would say 50 to 60% of properties right now are probably going to see a price decrease over the next 3 weeks or so. Under contract, we're probably trending. These numbers are kind of combined, but let's say there's probably 800, 900 homes that went pending in the last 7 days. And then closed, we had 650 close in the last week, but that is lower than new listings. And so what that means is slowly inventory is building up. That's very normal and very seasonal for the spring. But we're watching these patterns here. Not nearly as many coming off the market as they did last fall. So withdrawals and expireds have really dropped down. That's a good sign. That means more likely things are selling. It's just taking the normal longer length to sell. I'll show you some of this data. This is aggregate data. So this is January 1st through March 27th. So if we're looking at the first 3 months of this year versus the first 3 months together of last year, total sales were down about just under 25%. So again, only 3 out of every 4 buyers that would have been buying last year are buying now in terms of pace. Average sales are down about 10%. Here's where it is, cumulative days on market. Okay, so last year, homes were just selling like crazy because interest rates were very low. Still a lot of buyer demand because of those low interest rates. So generally most homes would sell in 1 to 2 weekends. Well, now it's going to take 2.5 months on average. So cumulative days on market, we're up to about 76 days. That's again, probably, 7-8 weeks. So we're watching that number there. And then median sales price is down around 11.5%. That number is going to get worse in terms of how much down we are once we get the April data and the May data and maybe the June data. Why? Because last year is when that peak happened and we're at the trough now. So what's going to happen is that gap's going to get bigger when we look at the percent difference between April, May, maybe June of 2023 versus 2022. So just be prepared for that. But in a nutshell, it just means that the market is shifting back to the way it used to be in kind of a 2017, 2018 market. These were normal numbers back then. Interest rates were a little lower in 27 and 18. Prices were lower as well, but it would take homes a couple months to sell. That was pretty standard. The pandemic blew that out the water and made everything look like it sells in 2 seconds. That's not normal. So we're trending back to normal inventory. It's just taking an adjustment for both buyers and sellers to get used to that and to understand how to do some price discovery, how to understand where the right price is. I wanted to look at this as well. This is looking at the rent side of what's happened over the pandemic. So this is a year-over-year change in the rent index. This is looking over the last 5 years. So you can see rents traditionally kind of go up 2-3% a year. At the very beginning of COVID, it dropped because everybody was nervous. You had eviction moratoriums, you had all kinds of trends in the market that were putting downward pressure on the landlord side. They were, that was going to make it difficult. Plus you had government programs that were going to come in and kind of backstop rents. So what happened is rents dropped at the beginning, but then when all the surplus programs came out and the money started flowing and the low interest rates came out, everything rushed into housing, and that's what made the house price go up. It's what made the rents go up. And so you can see this massive surge. Rents went up, peaking almost 20%. This is nationally, in 1 year, year over year, in late 2021, early 2022. What's happening now, it feels like rents are softening. They're not softening. They're still going up. They're above 0%. They're just going back to that traditional 2-3% increase year over year. And so what's happened is, just like the for sale side of the market, we're seeing the same trends happen on the rent side of the market. You had this massive spike of demand and interest and money flowing into real estate. That money's pulling out, or at least stopping inflow into real estate. And everything is kind of working its way back out of the pandemic and back to normal. So anyways, I think these trends are interesting to watch. Right now, the market's okay. I would say buyers are out there buying things. We are seeing things go under contract every week. I'm seeing some of the best stuff on the market sell in 1 to 3 weeks. The average home is going to take a few months to sell. And so buyers are expecting that now. Sellers are probably struggling more with that concept. Everybody wants the house to sell the first weekend, but I can tell you that's the direction this market is going. If I look at competition for my sellers and the things that we're looking at in my buyers, most properties are going to have multiple digits on their days on market. Anywhere from 10 to 80 days on market is pretty standard now for most properties that I'm going to show my buyer clients. If it sits on the market more than that, that just means either they started too high, but I want to see if they've done some healthy price reductions, or did they stay at a price because they just want their number. Those are the types of properties that most likely will not sell. I hope this is helpful. Make sure every week to follow us on YouTube. We're going to post all these videos at Ryan Kelly Group on YouTube. And of course, we'd love the opportunity to work with anyone you know. So if you know someone buying, selling, or investing in real estate, happy to go into a deeper discussion with them on this data. Until then, hope you guys enjoyed your holiday weekend, and talk to you soon.